my next guest will surprise you with his thoughts on the Dow's record high. With me now is Adam Last, creator of the Wave Strength Charting System. He's here to tell us where he sees the Dow landing in the next few months. Welcome, Adam.
Good to be here.
Adam, after reading your recent editorial, I get the sense you see a different Dow. What's your take on what's happening?
Well, I'm still not entirely straight to my mind whether this is a wonderful buy signal or perhaps a sell signal. Let's take a moment to look at previous times the Dow's got this high. Last time we saw heights like this, we're talking January 2000, Dow hit 11,750 and immediately retraced 38% over the course of the next 2 years. I don't know if that's what we're looking at right now. However, a lot of my key signals are starting to show something a lot more immediate and a lot more assured.
For example, what are some of the signals you're seeing?
I'm looking at trend channels. I'm looking at a few key oscillators such as momentum, MACD, a couple of proprietary ones that I like to keep to myself here. What they're alerting me to is a very continuous cyclic drop. Something that whether you think it's a bull or a bear market, within those markets, you see a very steady drumbeat of rise and drop. And it's that drop that we're getting ready to come up to now.
Okay, so you basically then, let me make sure I have this right, you're suggesting we're going to see the Dow go back down.
I am suggesting at this point, let's look at again at the previous cycle. In 2000, when everyone was convinced that we had a robust, strong, rising bull market, we still saw 3 drops of averaging 16% within a bull market. Since 2004, we've seen 4 drops that averaged 8%, again, within the context of a bull market. So you don't have to have a huge breakdown or a severe bear market to take a lot of money out of people's pockets if they're not prepared.
Okay, so you've seen some drops in 2004, you said?
Since 2004, 2004, 5, and 6.
Okay, so you've seen these drops, so that's why you're at a point where maybe you're going to see this Dow turn downward. And if that's the case, would you be concerned about a recession?
Now, a recession is an economic issue. It might be the trigger that begins to bring the Dow down. That would be another story. Then we would start looking towards an even steeper drop. But no, we don't need a recession, and we don't need even a bear market to take a substantial amount of money out of people's pockets if they're not protected as they ride the Dow towards better gains. An 8% drop, the standard cyclical drop within the rising market, would still mean Dow 10,902 compared to current heights. That's a big loss for a lot of people that are not prepared.
It's a big loss, and right now, because people were excited to see that the Dow had reached a record level, many investors are going to be bullish. So if I am that investor and I'm bullish on the Dow, what do you see me doing? How do I turn this into a chance for money?
Well, what I would ask an investor to do is to begin to match their stock purchases with select purchases of long-term broad market puts. A couple of good vehicles out there. Diamond, options against the diamonds are good. Options against the spiders is good. We've done this before. We've actually recommended last summer that our readers purchase broad puts against the larger market. They cost next to nothing compared to your stock purchases. And our readers made as much as 153% when the rest of the market was falling.
That's very, very good. So you were able to give them sort of an advance warning, more or less, of what was happening, and then you put them in a position to take advantage of it.
It's almost the equivalent of wearing a seatbelt when you go out for a drive. I wouldn't ask anyone to drive over 10 miles an hour without a seatbelt and an airbag. That's what you could consider this for your portfolio. It's the safety factor that would allow you to buy more stocks in a risky market.
Now, we've talked about investors who are bullish because of the Dow's record high recently. Now, suppose I'm bearish. What action do I take then?
Then you would use the same vehicle, but you would severely diminish the amount of stock you bought against it. If you are out and out bullish, then you would load up on either diamond or SPY puts. A 38% drop, which is the potential drop within this market, should it turn bearish, should we see a recession, and should it turn bearish. And there are substantial signs that that could be approaching. Oh, it could be awesome. You could see gains in 4 digits from puts at this time.
So do you feel that this is a possible call before the storm, Adam?
I would certainly think that the signs are building up in the market that we are due for at least a cyclical drop, and there are all sorts of really rather ominous and scary signs of this larger drop looming in the market.
But if that were the case, from what you've just said, you've given us 2 ways to attack the situation, whether we're going to take the bullish approach or the bearish approach from your system.
That is the convenient portion of the system. A good technical system doesn't particularly care if you're long-term bullish or long-term bearish. It protects you against what's coming up right now. It's very practical. It's very pragmatic. It's not based on philosophy. It's based on facts on the ground.
That sounds great, Adam. Thank you so much. So Adam suggests the party might be over and is giving his readers a storm warning. More information is available at wavestrength.com, or you can go to taipanfinancialnews.com.